welcome traders to our end of week technical analysis video. Jumping straight into things here, as you can see, since we last left off, we saw a bearish flip since this new all-time high was created. And if you remember from our last technical analysis video, I spoke about the necessary move for a bearish flip to take place. As you can see, we are in an uptrend still on the hour one time frame. You can see that quite significantly. However, we are starting to see some bearish divergence here. So the first thing that I can see just with the naked eye is I can see a head and shoulders pattern has formed. You can see with the left shoulder of the head and then the right shoulder. So what does this determine? So this determines if price is going to continue bearish. We will look to see if that neckline is broken. So with that being said, we're going to draw in our neckline, and as you know, we draw in the neckline from the first point of the first shoulder, and then we drag it on and across, touching as many wicks as we can. So that's our neckline right there. So what we're looking for, if a bearish continuation is to take place, we're looking for price to continue past this neckline level, perhaps come back up to it to retest it as a resistance and then continue on further. That is one possible scenario just off of a chart pattern that I can see straight away. So there's definitely a head and shoulders pattern that has formed on our hour one. Anyway, we're going to go down to our minute 15 and just have a little look more into detail as what has happened. So as you can see, we can see that after this all-time high was hit of around 3,500, we can see that price has become bearish and has since consolidated roughly between this range and this range. So we have a top side resistance of around 3,370 and a bottom side support of around 3,290. So with that being said, what can we see for gold right now? So obviously this week, to start off the week, we had a very big impulse, a bullish impulse that drove price a matter of 2,000 pips. Price then reached a all-time high, and since then price has come all the way back down to where price originally took off. As you can see, the distance that we saw the bullish move take is the same as the bearish move. So with all that being said, we're going to go ahead and have a look now into our consolidation phase that we can see here and that we was just speaking about. So we can see, if I mark this in with a path real quick, you can see that price has respected quite a few of our points of interest, indicating to us that our levels are definitely still significant. So this is sort of what the market is looking like right now. We can see a consolidation phase taking place, and it's going to be quite simple to follow the market right now. So as you can see on the minute 15 time frame, the most recent test of that top side resistance of around 3,370, we are in a bearish move now. So what we're looking for price to continue in this bearish momentum is, again, obviously confluencing it in with our hour one time frame. If we see that neckline broken, and on our minute 15 we're looking for our points of interest to be broken through. So as you can see, we want this point of interest to be significantly broken through, targeting our next level of around 3,245. So that'll be the bullish indication, the bearish indication that we see. And then it's just vice versa. So if we see price surpass this level, we most likely will see a continuation. If we see price surpass this level, again, continuation until we find a point of interest where price finds resistance. Perhaps it's at that top side resistance range of 3,370, with price then coming back down and continuing on this same sort of consolidation phase that you can see happening before us. With all that being said, there's quite a few things happening around the world economically. So gold has lost its momentum. Obviously, you know that on Sunday, sadly, the Pope passed away, so that will definitely have an impact on the market. And if I go ahead and check the dollar index real quick, you can see that price has continued bullish after this significant bearish drop. So with all that being said, economically, there's still a lot of other things happening around the world. I believe the US has just bombed Yemen, which for some reason will, and I know this is just the way the world works, it's quite sad, but the US has bombed Yemen, which then means that the dollar has strengthened, indicated, and that is shown by gold's price weakening. So if you remember, and if this is your first technical analysis video that you are tuning into, you know that the gold, so this is how gold works. So gold's price will go up when the dollar weakens. When the dollar strengthens, gold's price will go down. More or less, it's not exactly how that is. You could, if you compare it to the DXY, the dollar index, you will see that that's not a straight comparison, but that is more or less, for example, the higher time frames, that's more or less how this thing works. So if you can see here, the top side of this new all-time high was Tuesday the 22nd of April at around 7 o'clock on our hour one. Now if I go to our DXY and we look at that same time, here we go, give me 1 second. So we're about here. You can see that price then consolidated and the dollar index weakened. Sorry, we were here, weren't we? Yeah, 7 o'clock 22nd of April. So here you can see that when that all-time high was hit, so this was the all-time high of gold. At the same time, this is what the dollar index was doing, and then you can see that price continued on bullish. And then again, going back to gold for one last time, you can see that when that happened on gold, price became bearish. So it just shows us that the dollar is strengthening. The US tariffs that are being imposed by the new appointed president Donald Trump are definitely affecting the financial markets. So yeah, there's a lot of things to take into account economically, but more or less it's just a comparison between the dollar index right now. But if I show you the hour 4 time frame, you can see that we are definitely in a significant uptrend, and we have been for a very, very, very long time now. I believe the last bearish flip that we saw was around COVID times. If I scroll down, you can see some sort of bearish influence here, which is the COVID times, and you can see the same sort of moves taking place now, but you can see that the significance of this bearish move in comparison to here, which is when most of the tariffs were appointed. You can see that price has dropped significantly, but not a significant enough amount to say that we are now in a bearish market for gold. So with all that being said, I believe that is pretty much it for our end of week technical analysis. So summarizing things, we saw a big bullish impulse at the start of the week, creating a new all-time high of $3,500 per ounce of gold, followed by a very, very volatile bearish move that started on the Tuesday pre-London session and then came all the way down, with the bottom side of the bearish move finishing the next day at the start of New York session. And then since then we have seen some consolidation, and we have now made a new sort of rough consolidation range with a top side resistance of 3,370 and a bottom side support of around 3,290. So yeah, with that all being said, that is our end of week technical analysis conclusion. I hope you've all enjoyed this video. Again, don't forget to like, comment and subscribe. We are nearing 400 subscribers. I really appreciate all the support and the engagement that we are getting on our past few videos. It means the world. And yeah, just make sure that you're here for our next technical analysis video. These will be posted Monday to every Monday and every Friday, with a midweek technical analysis being a write-up. So yeah, once again, don't forget to like, comment, subscribe, and I will catch you in the next one. Peace.